The Precious Metals Week in Review, May 22, 2015. Brought to you by Precious Metals International. Volatility remained in the markets this week as speculation continued that the U.S. Federal Reserve would be forced to wait until September before contemplating an interest rate hike due to continued economic weakness in the U.S. The number of Americans filing initial claims for state unemployment assistance jumped much higher than expected, surging by 10,000 claims to a new level of 274,000. The previous week's data remained unrevised, and the 4-week moving average of claims, which most economists consider to be a better gauge of the labor market, fell to a 15-year low. On Wednesday, a survey was released that showed nearly 40% of unemployed Americans have simply quit looking for work. Express Employment Professionals, EEP, conducted a Harris poll of 1,553 working-age Americans, and Bob Funk, CEO of EEP, said, "This survey shows that some of the troubling trends we observed last year are continuing. While the economy is indeed getting better for some, for others who have been unemployed long-term, they are increasingly being left behind." The meeting minutes for the previous Federal Reserve Open Market Committee meeting were released on Wednesday in the U.S. The minutes seem to show a Fed that is still divided on when to raise rates and emphasize that the U.S. economy would need to see continued improvement from the weak first quarter before the Fed would even consider taking action. Most analysts interpreted the minutes to mean that it would be September, at minimum, before a rate increase occurred, and some analysts are now pushing their projections even further out into 2016. Also released in the U.S. this week, housing data, manufacturing, and mid-Atlantic business activity all seem to show that the economic weakness seen in the first quarter, which was widely blamed on winter weather, may be continuing into the second quarter as well, despite improving weather. In the Middle East this week, violence and unrest saw a spike as Islamic State fighters continued to take over territory in both Syria and Iraq. On Friday, in Saudi Arabia, a suicide bomber detonated himself at a Shiite mosque during Friday prayers, and the Islamic State was quick to claim responsibility for that as well. In Europe, Finland has apparently given instructions to some 900,000 military reservists on what their expected roles would be if a military crisis were to occur. Finland shares a land border with Russia, and the timing and contents of the letters that the reservists received are likely not a coincidence. Russia's relations with the rest of Europe continue to sour as the crisis in Ukraine drags on. On Sunday, Reuters reported that NATO is now warning that Russia may be preparing for a new offensive in Ukraine, amid the unraveling of the so-called Minsk Agreement that had called for a ceasefire between Ukraine troops and pro-Russian separatists. In the United Kingdom, inflation has turned negative for the first time since 1960, according to official data released on Tuesday by the Office for National Statistics, ONS. The Bank of England, BOE, seemed to hint last week that it had expected inflation to turn negative in the near term. But the BOE also said that it expected prices to pick up in the longer term on the back of higher oil prices, wage gains, and an increase in food prices. In Asia, the Bank of Japan, BOJ, kept its stimulus program unchanged on Friday, which was widely expected. Analysts still predict that the BOJ will be forced to use additional stimulus measures since it has been unsuccessful at moving towards its 2% inflation target. In a research note, Hiromichi Shirakawa, managing director of Japan economics at Credit Suisse, stated, "We continue to think that the BOJ will be forced to opt for additional easing into October as the board's inflation rate forecast is turning out too optimistic. Triggers for additional easing moves will be downshifts in expected inflation rates and material softening of ex-energy, CPI, Consumer Price Index." In Greece, further details over just how near bankruptcy the Greek government may be emerged. Greek daily Kathimerini reported that Prime Minister Alexis Tsipras wrote a letter to Christine Lagarde, chief of the International Monetary Fund, IMF, last week, saying that Greece could not make the payment that was due last week without assistance from the European Central Bank. Mr. Tsipras called on the ECB to raise the curbs on Greece's ability to issue short-term debt. Greece eventually tapped an emergency fund held at the IMF itself to make the payment last week. But such an unorthodox move will likely not be an option when the next payment is due on June 5th. Moody's published a report on Wednesday stating that there is a high likelihood that capital controls will be introduced in Greece, and downgraded its outlook for the Greek banking system to negative. Crude oil saw some weakness this week, as traders appear to take profits ahead of what will be a long weekend in the United States and much of Europe. Data from the U.S. Energy Information Administration this week showed a decline in U.S. stockpiles, and that decline is expected to decrease further as travel in the U.S. picks up over the Memorial Day weekend. A resurgence in violence in the Middle East may mean that oil prices in the near term will see continued support as fears over the supply chain increase. The euro began the week dropping against the US dollar through Wednesday, at which point it found a bottom and began moving basically sideways for the rest of the week. The euro saw a slight rise early on Friday, but a sharp sell-off Friday afternoon will see it close the week negative against the US dollar. The Japanese yen also began the week declining against the US dollar, and it too seemed to have found a bottom late on Wednesday. The yen drifted higher through Friday, but saw a steep sell-off early on Friday that will see it close lower against the US dollar as well. Volatility should be expected to continue. It will be a 4-day weekend in the US and much of Europe, so trading in those areas will resume on Tuesday. In the Middle East this week, the Islamic State, IS, made sizable territory gains in both Syria and Iraq, taking over Ramadi, the capital of Anbar province to the west of Baghdad in Iraq, and seizing the city of Palmyra in Syria. General Martin Dempsey, the chairman of the U.S. Joint Chiefs of Staff, speaking in Brussels this week, frustratingly described the seizure of Ramadi by saying, Iraq's security forces were not driven from Ramadi, they drove out of Ramadi. In both Ramadi and in the Syrian town of Palmyra, IS militants hunted down government troops and fighters after capturing the towns, killing any they found on the spot. It seems to be apparent that current efforts to limit the growth and impact of the Islamic State have so far been ineffective. In Asia this week, China said on Friday that it was strongly dissatisfied after a U.S. military plane flew over the area where artificial islands are being constructed by China. Chinese Foreign Ministry spokesperson Hong Lei said the Chinese military drove the Poseidon P-8A aircraft out of the area in accordance with relevant regulations, telling a news conference that such action is likely to cause an accident. It is very irresponsible and dangerous and detrimental to regional peace and stability. We express our strong dissatisfaction. We urge the U.S. to strictly abide by international law and international rules and refrain from taking any risky and provocative actions. U.S. officials at a media briefing in Washington, D.C., said that the flight was entirely appropriate and that the U.S. Navy would continue to fully exercise its right to operate in international waters and airspace. In Europe, negotiations between Greece and its international creditors appear to remain at a standstill. On Wednesday, Reuters reported that the European Central Bank had raised its cap on emergency liquidity assistance to Greek banks by another €200 million. Most analysts think that the debt-laden country, which continues to struggle to make its pension payments and government salaries over the next 2 weeks, will be unable to make its June 5th payment to the IMF. A default on its debt is likely to trigger further crisis in Greece, if not an outright forced exit from the European Union, amid what can only be classified as a sovereign default. In France this week, the IMF also warned that government spending and debt levels remain too high. The IMF said, in its latest economic outlook on France, which was released on Tuesday, that continued efforts are needed to tackle France's fundamental economic problems: high structural unemployment, low potential growth, and record-high public spending. The IMF is pressuring the French government to implement its own set of reforms to reduce public debt. As we enter a long weekend, it remains important to monitor global news sources for factors which could affect precious metals prices, potentially sending them higher. As precious metals prices have continued to consolidate around current levels, wise investors have held steadfast to their policy of acquiring additional physical precious metals as part of a well-diversified portfolio when buying opportunities have presented themselves. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, May 22, 2015. Brought to you by Precious Metals International.